Good morning, everybody. My name is Valentina Stokes. I'm the CEO and co-founder of Secure Living. We're an online real estate marketplace that connects retail investors to institutional-grade real estate investing opportunities. We are based out of Charlotte, North Carolina. We are a member of FINRA and we're registered with the SEC. So what we do is, as of March 1st, we're officially launched with the vision to make real estate investing more affordable and accessible to the average person. So we've removed the barriers associated with real estate investing by allowing the average person to browse our site and purchase shares of real estate. These investments are then pulled together to allow real estate firms to use alternative capital to fund their projects. The problem that we're solving here is really access to these investment opportunities. What we see here is that non-accredited investors make up 90% of US households, but their market penetration into alternative investments is in the single digits. This is due to historic access constraints. According to a report by McKinsey & Company, retail investors make up to a value of $50 trillion. What we want to do is capitalize on the purchasing power that this group of individuals has. And this not only makes sense socially, but economically as well. If we look at the commercial real estate market in 2021, that was a $20.7 trillion industry. And of that $20.7 trillion, multifamily, retail, and office space made up $9.9 trillion. These are the same types of properties that we want to support and fund on our platform. And then if we drill down just one step deeper, you see that real estate crowdfunding was a $9 billion industry in 2021. If you compare the obtainable market to the serviceable available market, you see there's huge growth potential. So we're bridging this gap. Our solution provides a two-sided marketplace that's a seamless flow of transaction and communication management, making it easier for the real estate firms to set up a funding campaign on our site, and also for the average person to go to that site and purchase those shares of real estate. So what we see by the firms that are approaching us, typically it's multifamily ground-up development, or it's either forced appreciation via renovations. So these firms historically have only been able to target high net worth accredited investors, and they come to us because they want to open up their investment opportunities to the general public. So a broader investment pool and also greater process efficiencies are of great need to them, and it's a need that our company can meet. What we see is that there's really a shift in investment styles with volatility and lofty valuations of public companies. Investors are really pushed to private markets and alternative investments, venture capital, private equity, and of course, real estate. So we bring a wealth of value to those investors. One, they're better able to hedge risk, of course, and balance their portfolios. They're investing in assets that are backed by a physical asset. We work with real estate firms that have a proven track record that they show their past experience. There's also strictly defined terms of the offering, whether it be the holding period, the ROI, the security type. And we also work with the real estate firm so they can strategize multiple exit strategies to further reduce the risk for those investors. We have a transactional-based business model. So we make money based on the amount of funds raised on our platform. There's a 5% platform fee. In addition, there's a 2% equity fee for any future earnings that are generated by the property. And we're also thinking about doing a flat rate for marketing for companies that need a little bit more support. This is something that we discovered during customer discovery. So where did we start and how did we get here? In November of 2021, we started the process to get financially regulated and also complete our technology platform. In December, we were registered with the SEC, and as of March 2022, a member of FINRA. This really gave us the legal framework to be able to operate in this space and to help real estate companies issue securities. In May and June, we focused on grant and accelerator programs. And in August of this year, we started negotiations with our first potential client. They just launched their first funding round last month, and that's currently ongoing. So the team, of course, making this happen, myself, also my husband and partner, Christopher, we're both real estate investors who have seen the the difficulties of getting into the real estate market, but also raising capital and then managing those funds without the support of a tool or some sort of technology platform. In addition, I have experience in marketing and product management. Chris has experience in finance, funding, and compliance. In addition, we have an established board, an advisor, and we rely on their experience as an entrepreneur, a CPA, and real estate agent and broker. So what is it that we're looking for? The first thing we're looking for is partnerships with financial institutions who are looking to broaden their portfolio. We're also actively seeking investors who are invested in real estate or want to get into real estate. We currently have one offering live on our site. As I mentioned, the company's based out of Houston, Texas. CSF Construction wants to raise $200,000. They're offering debt in the form of a promissory note, 8%, and an 8 to 12-month holding period. We're also onboarding 2 other companies right now, one based in Charlotte, North Carolina, the other, again, in Houston. And we also have a very strong investment pipeline right now. So in 2023, we're set to fund about $7 million. This would equate to about $350,000 in revenue. So as I said, we're actively seeking investors. By investing in the offerings on our platform, you are investing in us and helping us reach our revenue targets for 2023. Thank you. I am happy to answer any questions that you may have.
Oh, sorry?
Go ahead.
Okay, I'll kick it off. I'll do some of the stylistic feedback points because I think it's noteworthy here. So everyone watching, like the slides that you put together, just the weight of content, the use of visuals, I'd say that's on target. There are a lot of pitches that come through here where it's like, you're asking the slides to work too hard. So this is like top 1%. So anyway, it's a good observation, but also like good advice. This is really good. Okay, thank you. On the content, I'll try to stick with more of the style stuff. I don't know if you want to get more of the business model side. I'm not sure where your head's at, but couple points on like how the pitch rolls out. And this 6-minute format is so unique, right? Like, I think you've done a bunch of these. If you're doing grants and incubator stuff the past year with your company, you definitely are practiced. So these points are just very nuanced. The way you kind of entered, like, it's very, very on point. So you start the pitch tight. Like all pitches, it kind of gets a little bit, okay, like where are we going with this? And so I was thinking maybe like the value to the investor, the actual capital, that person, that persona, getting me a little bit closer and tighter on who that is and why they would want to use this up front. Okay. You kind of stayed institutional up front, which I like because I understand the space, but I also wonder if the retail user, the investor, is just a different way to start. So you might want to test that in a couple versions of how you just actually kind of open up and kind of get your narrative rolling. The total addressable market, the way you visualized it, like simple, but it was still too vague for me. I was like, okay, wait a minute, like what is the total addressable market? I get it. But that's probably the weakest part of the pitch for me. It's a very strong pitch, right? So it's like, I don't know, you can tighten that up or just maybe get my head there in just a more focused way. When you've dropped the multifamily concept, that's a good example of now I'm kind of getting it. Like the gear is getting caught. Okay, there's a lot of demand for multifamily, I don't know what to call it, commercial financing off this platform. Is there interest there from investors? Like that's kind of where I want to go because you're so good at getting it on the page and nailed. I want to go deeper, quicker now.
Yeah, I see.
So
to kind of move that a little
bit forward. Yeah. So
okay.
These kind of early stage pitches, you have to be able to accelerate or slow down based on the audience, right? So how evolved are they on commercial real estate, for example, right? Yeah. And then I don't know, just one last point on the materials. Actually showing us the concept of funding values or funding levels through the marketplace and how that translates into a business model, revenue. Like you mentioned at the end, hey, we're probably going to do $7 million of funding, $350,000 of revenue, I think is what you said. That's okay. Like there's another example. Like I'm tracking you. Like keep going. Like get it out there. So actually showing me what you think the business could do and closing on that, or closing with you and your co-founder husband as the team. That's not a bad place to end or try to land the plane. So I was kind of looking for that. Okay. But those are all like those are very kind of. I'm down in the weeds now with you. It's a great pitch. Really, really interesting approach.
Okay, thank you very much.
Yeah.
Awesome. First of all, awesome, great job. I would agree with all of Mark's comments on, I think you hit all the high points. The deck, the slides are really, really, really sharp. So maybe just to keep adding to some, I agree with his last comment. show a pro forma of kind of what this could be. Kind of go maybe one slide that goes a little deeper. Maybe a slide on competition, because there are a lot of competitors there, and then kind of how you feel like you're different, right? I mean, that was, as I was reading over this last night, I was like, okay, there's a lot of competitors doing this. Explain, in one slide, kind of how you're different. I think that's important.
Okay.
As you would dig into, and again, probably in that slide, a marketplace is a beautiful company, right? I call it, it's the double sell, right? You have to sell the consumers to come in and buy it. You have to sell the properties to kind of put it in. So it's hard enough to sell one customer. You have two, but that's what makes a marketplace a beautiful company at scale, right? eBay, think of all the big marketplaces. They kind of run on their own, right? And they're amazing. But getting them going is really, really, really challenging. You don't want one over the other. So as the investor, the questions I would ask you would be, how are you going to acquire the consumers in mass at scale? Like not getting onesie twosies, but how will you go out and get consumers to kind of come on? And then how will you, at scale and mass, get lots and lots of properties? Like, do you have a feeder of network and different construction company? Anyway, maybe explaining some of that. Does that make sense?
It does. I mean, the partnership was one area, of course. That's why we want to partner with financial institutions, but that's definitely a place we could probably elaborate on a little bit.
Just to kind of drill deeper on that, because I think that is the point, right? David's nailing it, right? Like, so marketplace, how are you going to build this thing? Where's the traction? How do you catch that gear, right? So I'm pretty sure David's seen a bunch of these. I've seen a few. There's pattern recognition that an investor is going to look for, and it's like, how are you going to catch that gear with the marketplace, right? Two sides, you in the middle. The other point I often make in these sessions is like, I'd rather you think about testing a couple concepts and what you're going to do over the next year than giving me this like McKinsey 50,000 foot view of the world, right? So that's another test point for me, is like, are you in that kind of build, test, learn mode as an entrepreneur, or are you still kind of in the clouds, like total addressable market's 9 trillion and we've talked to 47 property development companies, and like, that's all great, but I think you're going to get a lot more positive feedback and traction on fundraising and the business if you're really just thinking about testing a couple hypotheses, right? What brings those developers on faster, right? I'd rather talk to you about that in an hour meeting than, I don't know, what you learned reading 17 research reports, right? I think that's that entrepreneurial kind of grind that you just have to start to learn and just repeat on. So yeah, that's where my brain also wanted to get more, was like, how's that marketplace going to really start to catch a gear?
Okay. And you guys have time if you want to answer some of those questions.
Yeah.
Yeah. Do you want to elaborate on any of that?
I mean, I can't. There was a lot. To be honest, there was a lot. But I mean, as far as testing some of the hypotheses, this is what we are seeing also with this first funding round with CSF Construction based out of Houston, because there definitely are some learnings already. As I mentioned, our marketplace is really focused on non-accredited investors, but now we see we need a little bit more of a balance of accredited investors as well, especially, they're launching in November. We're getting around the holiday season. So we see that our non-accredited retail investors are a little bit more sensitive, let's say, around this time. So it's a very good point, and we are learning right now as we go. It's true, yeah.
So that CSF learnings, right, that's something to consider. Maybe not in the 6-minute pitch. Like, there are very few 6-minute pitches, right? Like, you might be at an industry conference and have 7 to 8 to 10 minutes to pitch, but most of the time you're going to get 30 to 45. So I would think about learnings. And I'm also, like, again, the second meeting, if we were to have a follow-up, I'd really want to start to dive into, okay, this accredited and non-accredited thing.
Sure.
Where is that coming from? What is that, right? And that can be a higher altitude, more abstracted conversation.
Well, I would love to address
that. I'd love to hear more.
People don't know. So accredited versus non-accredited investor, this is something that the SEC defines to protect investors. So an accredited investor is anybody that makes $200,000 annually or has a net worth of $1 million. Anyone who doesn't fall into that category is a non-accredited investor. And basically, a non-accredited investor has some limits on how much they can invest based on their annual income and their net worth. So when somebody goes to our platform to make an investment, it's going to ask you a general question. Are you accredited or non-accredited? It's going to tell you what that means. And based on the information you put, it's going to give you your maximums for how much you can invest in the year.
I
And
see. So
this
you guys
is
are actually regulating that
yes,
on your platform.
correct. It's mandatory.
What's that?
It's mandatory. Yes.
Mandatory, yeah.
Yeah.
That's an interesting feature yeah. You might want to mention that, I think. That's
Okay.
important.
Okay.
That gets to the like what's broken, right? So these marketplace ideas, when I see them, I haven't done a lot of marketplace investing. Like what's broken? Why does yours need to exist? What problems it's solving? Which you kind of address, but I think you can get tighter on that. And it's like capital formation is an interesting big picture concept, right? Like more non-accredited investors getting access to real estate as a way to diversify their wealth building, right? Outside of stocks and bonds and 401ks and what have you.
Traditional ones.
Yeah, that's an interesting area to kind of go deeper on.
Okay.
Hey, digging into the product from the consumer, from the accredited investor's perspective, what does it form the entity for me? Does it do the taxes? Does it automate the distribution of any rents or upon the sale? Like does the tech kind of do all that for me? And me as the consumer, I just put in $20,000 or?
Yes. So we do send out like monthly updates about how the project is going post capital raise. The investor, you're referring to the investor, right? Will also receive K1s or 1099s, the tax documents that they need. Our goal is to really provide transparent information where they can make the best decision based off their personal finances, and then all the follow-up and communication is also handled by the company as well. And that's one of the benefits also to the real estate firm, so it takes away from their need to do that. Yeah.
One other point on your advisory board, and this is again like kind of a fringe case, but this feels like it could press up against kind of consumer advocacy, I don't know, consumer protection, banking, finance regulation stuff. So like a legal advisor that's going to help kind of look forward and maybe around some of the corners on de-risking that, right? I don't know, the newly minted MBA graduate who put their only $50,000 into that Houston project, and then it's like, wait a minute, I just lost whatever.
And maybe we can add something. Sure, because we do rely on external service providers as well, who kind of do KYC, know your customer checks.
Yeah.
So we do get red flags if anything looks a little bit questionable that we could follow up on. So we do have certain partnerships with both companies.
That'd be a board of advisors or board of directors, or kind of someone who can help like think through those things as you build the product.
Okay.
It might not be a big risk area, I don't know. Just kind of my gut reaction is like, this is new, right? When you're talking about busting into the non-accredited space, I think it's new. At least I haven't seen anything like this.
Okay.
And it does feel like we're toppy in terms of like real estate values in certain markets. I actually do have a view on commercial based on other issues like risk analytics around sea level rise and flooding and what have you. So we're actually spending a bunch of time in risk analytics and insurance analytics behind commercial, right? So if some of these markets correct and or have significant losses off of, I don't know what to call them, storms, fires, floods, events, that's where nuanced and fringe cases, as they say, but like you want to be prepared legally to make sure that your marketplace isn't, subject to the risk, right? Yeah.
Understood. Okay.
Maybe one geography. The company is headquartered in Houston. Is that right?
The company that's doing the funding right now?
No, you're not. You're headquartered here.
Yes, correct.
But the partnership
Yes.
is in Houston. The addressable market here, nobody should question you. I mean, it's huge, right? I mean, it's just humongous. So my advice might be pick a couple of geographies and really, really go deep in them. Don't just spray it out there and do everything. Like really focus on Houston. If you just focused on Houston and Charlotte, you could probably build a, $3, $4, $5 million business in a couple of years. So
And that would be more
valuable
for you to see.
I think you got to focus, right? You got to do something different and then repeat. I think one of the biggest mistakes I see founders make is trying to do too much at the early stage. I always say narrow and deep. Go really, really kind of focus, 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 and you can always later on kind of go broad.
Okay,
Does that make sense?
Yes, it does.
Awesome, and that gives us a time, so give it up for Vontina.